All right, here's a good place to start. Let's just catch up on the situation.
Okay, well, you know me, I've been kind of fascinated with these sorts of things for the longest time. It was interesting too because during the pandemic, that's something sort of a scenario I had been studying for a really long time. And I had kind of war gamed all of that out. And man, it was just the way I had war gamed things. It was very, very, very similar to how things actually ended up unfolding. And this scenario, I mean, this is something I've been looking at for a long time too, and it's happened. And I got to be honest, in this case, uh, Danny, this is actually worse than I had ever sort of
Imagined it could be, yeah, yeah,
imagined or war
yeah.
gamed it out. And it's
Well,
like,
I
well,
think
Zach, Brent's at $90 and WTI is at 80. And I'm like, yeah, that's the problem.
yeah,
Like,
exactly, exactly. So from my point of view, the issue is the complete and utter lack of any kind of planning for what's up ahead. It's clear that the administration is either just not seeing this as a problem or is in such a delusional state that they think it's just going to go away. Right. As I mentioned with those financial planner guys, they still just think, it'll clear up in like a couple months. And what you have to realize is that even if it does, I mean, you're looking at a time delta of like 4 months before things start to re-equilibrate.
yeah, I remember, I think I told you this back when I was working close with Yanir 2019, 2020 over the COVID stuff. We were on a Zoom call with, it was a bunch of us, but it was me, Joe Norman, I forget this one female's name, and Nicholas was, or Nicholas, Nassim Taleb, who did the, anti-fragile and, Black Swan, all those great things. And I asked Nassim, I was like, I don't understand, honestly, where this complacency comes from. And he did tell me, he's like, Zach, what you have to realize is with social media being what it is, and people like, he's from Lebanon, and he, like me, he has seen war, and he's, been through some rough stuff himself, right? So he's sort of got a better
Well, bearing on
viewpoint,
reality.
right, on how bad things can actually
Yeah.
get, right? So he's like, what you have to understand is, he's like, he told me that when he got his PhD, he was surprised at actually like how unprepared a lot of the other PhD candidates were. Because at that point, he had already been through a career and all this other
Sure. So he had
real
all his
life
ducks in a
stuff.
row, and then these
So,
other,
right,
they're just winging it basically.
these kids, right, these essentially kids were there, and they didn't really, and these are largely privileged people that have never had to really even witness much suffering in their lives. So he's like, what you have to understand, he's like, I'm seeing this more and more in markets, and it honestly scares me, is that
Because those
when you
people are
actually,
placing large amounts of trades. They're playing with
right,
lots of money.
they're playing with a lot of money. And he said, especially now with today's demographic of traders and investors and market participants, they've only only been in a scenario where, oh, if the market stops going up, the Fed brings interest rates down to zero and then pumps money into the system, and they're just their whole view is that things are always good within this specific box,
Yeah.
period. So their brains can't even, like, they don't know what it means when stuff like there's actual supply shortages.
Correct, and I think that
And,
this is a great point to transition into what
right,
this chart is showing. We see that happening exactly right here.
exactly.
There's only so long you can buoy oil prices and keep them rather anti-buoy, keep them below a certain
Right,
threshold, because this isn't like, say, financial stocks or tech stocks, even where low interest rates can boost infrastructure and spending and R&D and stuff like that, pump up the EPS, and you could do magic. This is a physical thing, right? So you can't interest rate cut your way around like not having oil, right? It's a physical
right.
thing. So why don't you?
You can't expand the Fed's balance sheet and magic oil into existence.
Right,
It does.
right.
That's not that just that's these are molecules,
Yeah,
right?
yeah. It's
So
matter.
once you burn them, they're gone,
They're gone.
right? And
Yep,
if there's
exactly.
nothing coming in, there's nothing coming in. So that's what I'm getting at with this is actually worse than I had ever gamed it
Yes,
out. Like I said earlier on, I thought we would already sort of start at least tapering exports or something like that,
correct.
and that's not happening at all.
So what we see
Uh,
here, what this reminds me of is that kind of like, Wile E. Coyote when he runs off the cliff and he's like, "Oh shit." And then just like this reminds me of that. It's like this red chart where it's just kind of like do 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 and then whereas these other ones are, more or less sane, they're more or less, steady. But this is 2026, this is now. So we have to rely on projected data because, there's a little bit of a lag, but um and it's really not very hopeful.
yeah, and it's and from what we've heard from the Exxon CEOs as well as the Chevron CEOs recently, is that hey, look, like, and we had it turns out all the math and stuff that we've done, we've been right on the money in the respect that the guy who runs all of Saudi's oil, all of Qatar's stuff, that they've essentially said, like I said last pod, I did a little like logistics flow model myself to
Mhm.
see how long it would. I had a model like how long would it take just for the like the boats themselves to start to get the logistics flowing again. That alone,
You-
let alone all the damage that's been done and everything.
So that actually, I think I'll go. Speaking of logistics,
Right.
why don't you explain it with regard to what we're looking at here?
All right. There's over 1,000 ships on the left side, right where Kuwait is over
Uh-huh.
there
Okay.
in the Strait of Hormuz,
Yeah. So
and
right here.
it is interesting in that like I've actually seen this with my own eyes, and that's when it was like Trump was like, that's a lot of this. It's just having been in the military, having seen this landscape for what it actually is, and knowing people that have actually done some of the war planning for what would be done in Iran. I was actually skeptical that it was going to happen in the first place because it's like we had not done the appropriate placement of forces when the attack happened. So we were still piling forces in, you know what I mean, as the attacks were happening. And I'm like, this isn't how you do a war. You know what I mean? Like you have to set up logistics flow and
Sure.
pre-position assets
Prepare
and
for
all
things.
sorts of stuff. You actually have to prepare for things. You can't just shoot from the hip and say, we're going to go now. That's not how things actually work. So the model that I did showed that there are about 1,500 tankers that are there. Uh, they essentially go as fast as you can ride about a good road bike. You know what I mean?
Hmm.
At fastest they can travel is around 10 miles an hour, right? So you're going at
Well,
like
there's
a
some big
running
boys.
pace,
There's some big boys.
right? Exactly, a lot of momentum.
Yeah.
So
A lot
it
of
takes
mass.
them
Yeah.
time to position. Then they have to offload. Then they have to go back. So in order for that flow alone and the time lag within that flow to happen, let alone we're not talking about any damage, which we don't know the extent of the damage because they're not giving us accurate satellite data for this yet. right? But we do know that there's some damage, especially to the trains in Qatar. But we don't know what other infrastructure damage is elsewhere. But we're talking about, even if it happened last week, we're still talking about a solid 4 months where just the tankers alone, right?
Right.
Uh, and that's if everything works perfectly and there were a concerted effort. I don't see that happening, period, anyway. But
Yep.
we're talking about a 4 month lag where there's going to be an oil deficit.
Yeah.
Now, when did we work out we're going to, and you can actually look at what the IEA projects now,
Hmm.
right? What the IEA projects now, right, is that the United States at this clip, we're going to run out, let alone everybody else's SPR. We're going to run out entirely. Like, even if we say, screw it, we don't care about the structural damage to the pumps or the SPR or anything, we're just going to be out by August.
Yeah, I think
Boom.
that that's pretty. It's pretty
Right.
evident by this chart. It's like even if it's not August per se, I mean, it's pretty dire, right?
Right.
Um,
So let's think about this. So, okay, August we're out. Okay. Well, it's coming up on June 1st. So June, July, August. Uh
yeah.
Even in a best, and look, they were making, oil went down on the news that there was a memorandum of understanding, Danny. That means a memorandum of understanding is simply this: we agree that we'll talk about these. They haven't even as of yet agreed to what they're even going to talk about.
Right.
Think about that for a second, okay? And we're already short a month.
Hmm.
That's not good. How long did it take for the JCPOA to be negotiated? Over 2 years.
Yeah.
Okay? This is way more complex and way more dynamic than the JCPOA.
Hmm.
Okay? And we're expecting that there's just going to be some miraculous peace deal. And even with that miraculous peace deal, uh, we're still in a huge deficit for an entire month.
Yeah, and
It's not happening. It's
I
not happening. We're going to go into overruns. That's
correct.
it.
And so let's kind of war game this out, pun intended.
Mm-hmm.
Thinking about where the opportunities are and where the shifts might be. I think this is a great time to kind of transition into the North American region and some opportunities there. Why don't we pick up with what's shown here?
Yeah. Now, the do we have a map of just? I guess it doesn't matter, but I was just thinking. So when you look into it, what's going to there's only two ways this goes. Okay, we negotiate. Okay, until the SPR runs out. Okay, or Trump says screw it, we're gonna hit him again. Okay, or Trump is simply pressured, either due to his constituents or his friends or Lindsey Graham or whoever,
Whoever's
right?
pulling the strings.
Whoever's pulling the strings pressures him into attacking again.
Right.
Now, what's happened during this ceasefire is Iran has been able to re-equip themselves and actually arm up. Okay, they've been able to make more missiles. They've gotten better and more sophisticated missiles, it turns out, from China, as well as more sophisticated and accurate air defense from both China and Russia now.
Well, not only
Okay.
that, but China itself has been just sitting there slurping up the data on U.S.
Okay.
logistics and planning and so forth. And you mean to tell
Actually,
me that they're not going to share that with Iran?
right. Well, not just that. If you want to go back to the Hormuz slide real quick, this is an important note. Uh, right around Kuwait over there, there
Yep.
is a Chinese intel ship literally sitting there. It's a research vessel, but they have a bunch of cryptographers there, some of the best AI China has. And what they're doing is they're studying absolutely everything that's happening with US aircraft flow and strategic maneuvers with our Navy, all the comms that are going back and forth.
Mhm.
They have all of it. right? So they're capturing, if somebody takes a dump, okay, and doesn't flush on one of those aircraft carriers or destroyers that we have there, the Chinese know about it.
Yeah, and they probably could
They
tell them what they ate for breakfast too.
exactly. That's so that they have assets right in that region that are capturing absolutely everything.
Mhm.
In fact, what's happened during this ceasefire, interestingly enough, is Iran has been able to apparently shoot down more aircraft. Okay. They've been able to target destroyers. Again, it's fog of war, so we don't know if like they hit the destroyers. We don't know if, but we do know this is admitted. They've shot down at least 5 MQ-9 Reaper drones. Okay,
Mhm.
so it's very clear what's happening here. The U.S. military during this ceasefire, they're doing what's called probing operations, where they're like, okay, if we come this way, we could probably attack and distract them over here to get them to focus. And they're sort of like trying to play games with the Iranians to find an opening to attack. As of yet, the closest they can come is the shoreline of Hormuz, which is not good for the U.S. military because that goes to show all of the probing strategies that they've had. They can't even get in inland enough to drop
Yeah,
anything serious as of yet.
right.
So it's militarily, the picture doesn't look good because the way I see it, if there were openings, I think Trump would have already taken it by now. So, but
Absolutely agree. And so we can kind of start to think like, if this is just not going to be able to be cracked, right? And I don't really see a universe where
no,
that's
no.
possible. We want to start thinking about our own hemisphere. So I think that this is a good time to discuss what we're looking at here.
Okay, I love this right here. The the world, and I love it, man, because when I look at it, I look at the math, and I look at the opportunity here, and I'm kind of blown away. I'm like, so when Trump says we don't need Hormuz, what he's actually saying is the United States, we still import a lot of crude, okay? Because of our shale plays, we don't have a lot of heavy crude.
Hmm.
And our refineries, especially in the Gulf, those are primed for heavy crude, okay? So to feed those refineries specifically, and again, there's logistics issues here where you need to keep those pumps primed or else the
Correct.
refineries themselves have trouble.
And as
Okay.
as we stated before, this isn't something you can snap your fingers and just press a restart key or whatever. These are things
No.
that may not ever come back up online because there's actual physics involved here.
Right. Now, I thought about there one thing I initially was thinking about, what you really want to try to make the profit in is Brent crude. Because if you've noticed, WTI and Brent have started to diverge. Okay. The reason for that is the United States can use its own WTI. Okay. Brent is used internationally, right? So Brent is going to be the thing that's bid up when the Asian countries, Japan, South Korea, China, whatever, and as well as the EU, they're going to bid for that Brent. Okay. Now, what's better than that, though? It turns out Alberta is really where everything's going to be bid up really, really big. Why do I say that? As soon as the United States starts to run low on its SPR, okay, they're going to have to, and I say have to, focus on Alberta. They have to logistically because they need to at least start, right? They need to at least start those oil flows from Alberta to the Gulf of Mexico,
Hmm.
okay, in order to just keep their operations running. Because
Correct.
it's not a light switch, you can't turn them off and on, right? So what's going to happen in Alberta is because there's two pipelines, and these are called like the XML pipelines. They were in
Hmm.
an email that I sent.
Yep.
But yes, there's these pipelines from Alberta off into the Pacific through British Columbia. Okay, now these are massive pipelines. It turns out, and because of this, uh, Alberta Oil, who has like, we're talking like decades worth of tar sands oil,
Hmm.
right? Which they're already set up and everything. It's actually, there's a lot to be had in Alberta for two reasons. One is just the crude oil itself is perfect for U.S. refineries, and it's perfect for the other refineries that usually come out of the Middle East. Not just that, but in Alberta, you can actually, I should have sent a photo. They have stacks of, sulfur used to be a byproduct of natural gas and oil,
Hmm.
right? And they have literal like stacks, like these pyramid stacks of just sulfur.
Wow.
So those sulfur shortages, you treat it with steam, you can get sulfuric acid,
Hmm.
right? So they can take that waste and they can over time just turn that around to rewire the networks such that most of that sulfuric acid from mining and so on and so forth all comes from Alberta. They've
Right.
got plenty of it. Now, the reason why this is so beautiful is because these companies, due to the issues between Canada and the U.S., also the relationship of the U.S. dollar to the Canadian dollar, and the fact that these pipelines are relatively new, they're freshly built, right? The way it used to work is the United States sort of had a monopoly on Albertan oil. Okay, that's not the case anymore. Okay, now what's going to happen to these companies in Alberta that make this crude? They're going to be able to ship it out through the Pacific, which means Japan, South Korea, China, and India may be bidding for all this oil if Hormuz stays closed, which my base case is that the United States, at least,
It's
just
fucked.
we're not going to, yeah, we're not going to be able to operate out of there, forever. We're
Yeah.
not going to be welcome back in that. And
For
trust me,
like at
dude.
least a generation.
Yeah, and trust. I've heard, like I remember I would listen to people on like all these like political economists and stuff talking about like, Iraq and Afghanistan and all this other stuff and how we can negotiate with the whatever. And it's like, I had been there, dude, and I'm like, you know,
Nope.
it's like, dude, you have no idea what we've done there. Like we just cauterized that whole region.
Hmm.
Like they do not want us there. And I'll tell you, that was when I was in. They don't want us. They
Could
definitely
you
do not
imagine what
want
it's
us there
like
now.
now?
Right.
Yeah, and I
Exactly.
think before moving on, I think it's important to stress like people might be looking, okay, Canada, like what? Well, let's ask who are the four biggest oil producers on the planet? Well, one and two is U.S. and Saudi. We're like neck and neck. U.S. is a little bit higher, but we're basically neck and neck roughly. The second tier is Canada and Russia, roughly the same, right? Everybody talks about the Middle East and OPEC. They're like way down here. Now, granted, they're cumulatively they're significant, but aside from Saudi, they're kind of insignificant. Those big four are really where it's at, right? And so right now we're talking about Canada, which is I believe last time I checked number three. I'll have to fact check that, but if anything, it's number four. It's definitely not down there, in the fives and six because there's a steep drop off, right, in terms of production.
Right.
So Canada is nothing to shake a maple leaf at, but um, and we're actually going to get into some, if you're ready, unless you wanted to have any
Well,
closing.
I wanted to say on Canada,
Okay,
but when Trump says the United States, like we don't need Hormuz or whatever, what he actually means there is if the United States just focused on the Western Hemisphere and you included Canada and Venezuela, that would be true. Here's the problem with that, and that's why Canada is so promising right now, as far as I'm looking at it. Okay. Chevron and Exxon recently just told the Trump administration, hey, we're going to need like investment guarantee because we're talking about hundreds of $billions of infrastructure that would need to be built,
sure.
as well as security guarantees and so on and so forth. Right. So, yeah, Trump did do that thing with Venezuela, but just like everything else, unfortunately, he didn't really stay with it long enough and nurture it and start to build something substantial enough to where like we actually have throughput there
Right.
and we have production coming out and we have operations running. We're just not there, right? And the
Yeah, because
companies are too skittish to actually move in.
another shiny object popped up, so you know.
Exactly. So what I'm trying to say with this, the only other alternative, because the infrastructure simply isn't there yet in in Venezuela, it's Canada,
Yep.
right? And that's where we have these three oil producers
Sure.
here on the left.
So, yeah, basically, I've divided this up. We'll go through these, based on the columns. But the first column here are Canadian stocks. Let's pop on over to the charts now, and I have again my entry point. While I'm drawing the Fibonacci's, maybe you could just tell us a little bit about this one. This is Synovus Energy.
Yeah, the two I like are the most honestly. Suncor was the first I look at, but Synovus is real interesting. They again they have a operation of tar sands,
Hmm.
but they're actually able. I believe their cost of production they can actually be out ahead at even $30 a barrel, right? So any cash that they make above that is just extra cash.
Hmm.
Okay. Now, when you look at these stocks, what's that current valuation at? That
So
one's
this
at
this one's at 2760.
okay. Yeah, 2760. Yeah, I got in at 2750. Did it
Yeah.
hit? So yeah, that's what I got in at today.
So yeah, 27.6.
And
So
this one I like the most, honestly, because well, not the second most, and I'll tell you why. They're still paying down a bit of debt, but given the timing that we've talked about, what's like most likely to happen come I say at least by mid-July. Okay? That means US refiners are going to have to start
mhm.
bidding up that price because they can't afford any lag time for that when that
Well,
SPR runs out,
and
right?
exactly. So one thing we got to stress is like again, even if you snapped your fingers right now and Hormuz is just magically open, there's still going to be that lag
It's not
time.
going to matter,
Right,
right?
exactly, exactly. So we're still going to have to depend, reach out to other sources to fill that gap.
Right, exactly. Now, my base case is that that gap's forever, right? So what we're likely to see from now on, now you got a double whammy going on. In July, US refiners will have to go to the Canadian the what do you I guess you call them producers, just
Hmm.
Canadian producers,
Yep.
right? They would have to go to the Canadian producers, and I looked into it. What I noticed the past 2 days is number one, that started to happen. It just started to happen like a few days ago. Also, with these companies, along with Permian Resources and Devon Energy, which we've discussed before, I'm starting to notice headlines where hedge funds are moving in on this space.
Yep.
So this, so I think these are all good signs that the smart money, or sort of like there are people with way they get paid way more than we do,
Right,
and
right.
people with
And
way
have a,
more resources
exactly.
are
So
kind of coming around to our playbook.
so
You
so
know what I
that
mean?
that's like
Yeah.
the 800-pound gorilla analogy. Where does the 800-pound gorilla go? Wherever the fuck he wants. Where does the 600-pound gorilla go? Wherever the fuck he wants, except where the 800-pound gorilla goes. So you want to be
Mm.
behind the 800-pound gorilla. You don't want to be in his way, right? So given that, I could kind of transition into the technicals a little bit. I believe here at my level, that's 27. This is where I bought. I'm again trying to be just really honest about where both of us got in, me in particular, just because I have that information at hand. Right here around 27.52. So I got 2 cents worse than you did, and
Yeah.
which is about right because I purchased today. If you're really aggressive, if you're really aggressive, you I mean the sky's the limit really for this guy, especially like look at look at the growth. It's been aggressively bullish. Nice straight up into the right here. A reasonable target is 34.95. More aggressive is 40.20. But that just is going to be a matter of time, in my opinion. If you're really stingy and you want to get a super good price, you could hope for it to fall to 25.01 through this vacuum zone here. But like I said, I think that we got a pretty good price because you see there's green triangles here showing strong support. So there's a good chance that we could pivot and head higher from here. So and especially when we start to feel those effects, those fundamental effects, those macroeconomic effects, then it's really going to be off to the races.
Now, one caveat I want to say with this one is uh, they they do have some outstanding debt. Now, what I see happening is with the cash flow, when you actually look at the structure of their business, because of the normal trade between Canada and the United States, and Canada being sort of like second rung to U.S. industries historically, along with, Canada, Danny, you lived there for a while. They're big into the ESG. They're big
Yep.
into the, what all that stuff, right? And because of that, let's just say it's not popular. It's not trendy. It's not as far as an investment vehicle goes. In fact, even due to the ESG stuff, there are due to the ESG laws specifically, there are laws in place that keep Canadian financial institutions from investing in these companies because
Interesting.
the government is openly hostile towards
Yeah,
them.
yeah.
However,
Well, I trust me, I know that better than anybody. But
right,
Alberta itself is a different animal. They're a lot more fiscally and socially conservative there. I
of
think
course,
that
right,
that not the least of which would have led to a referendum on their independence, which of course they voted for overwhelmingly, but got shot down. Go figure.
mm-hmm.
But they have more than enough resources to survive on their own without the leftoid insanity of the rest of Canada.
But what's great about this is even though they have some debt, because the government has been openly hostile towards them for so long in the financial space, because of that, they have a very, very, very aggressive sort of like whenever we're cash flow positive, we either do stock buybacks or we give the dividends to our investors,
I did
right?
notice that this one pays dividends.
Uh-huh. And when you actually look at how it's structured, Danny, they have it to where the more debt they pay down, they essentially take all that extra cash flow and give it right back to the investors. So they're very investor friendly. You see what I'm
That's a
saying? So
great
right. So
philosophy.
what we're looking at is from the positive cash flow. It's already happening now, obviously, but with the likelihood of the current trajectory of that positive cash flow, I think they're going to be able to pay that debt down real quick. And as soon as
Sure.
they do, they're just going to either return it with buybacks, dividends, or other. Apparently, they have sometimes when they have like a really good month, people that just own their stock, they just write them checks. They'll just
That's
send you a
awesome.
check in the mail. So yeah, yeah. And both of these companies that we're going to go over have a
Yep.
structure like that, except this one, Canadian Natural
Sure.
Resources, uh, they're a bit more not mature in they're just more. They've already gone through the debt pay down phase. So all of their cash flow, that's why their stock is more expensive, right? All of their cash flow goes straight back to the investors,
Yep. So
right?
we have
So
a
while
dividend here
this,
as well.
exactly. So while their stock is, about what, 2x the previous,
Yes.
uh,
Thereabouts. Yeah.
both of these companies, they're strongly, strongly, strongly already this one in particular is already well networked with
Yep.
U.S. refiners. And what we're going to see is not just U.S. refiners bid for that crude, but due to that Pacific corridor, we're going to see the Asian market bid for that same crude,
Yep.
right? So
So
this one's already gorgeous. In
yeah,
my opinion.
yeah,
Yeah.
absolutely. This is one I bought today as well at 4507. That was the price that I got. Green triangles here on the KRI, meaning we have strong support at this level, which coincides with the Fibonacci level. That's always good. If basically setting up for a pivot, we have this long kind of what we call a sideways corrective phase, which is a good thing. It means, okay, we made highs and now we're kind of chilling. We're not bubbling. We're just, kind of relaxing, feeling out the price territory. That's perfectly normal and healthy. Price targets would be 54.31, then 60.88, which is amazing if you can conceive of getting in around these type of prices. Just gotta keep an eye out on the vacuum zone to 41.89. Could use that as an opportunity to add or enter to begin with if you're super stingy. But yeah, all in all, technically this looks great to me with some very enticing profit targets up here.
Is
Another one,
that is
another one that I bought
so?
today.
Yeah, this is another one that for me at least, this is like a long play. Anytime it's gonna dip, if I'm able to, like right now, Danny, I'm looking at like what uh what I can sell. You know what I mean? Like to make room
Sure,
for
sure. Yeah, yeah. You're
these
looking to
two.
swing trade on them, make
Yeah.
10% here, 20% there, and roll it up. Yeah, yeah, that's a perfectly reasonable strategy. Me, I'm more into just kind of stacking onto positions I already have
Hmm.
with winners that I believe are winners. With that, we can move on to this one's Suncor, which was another one I picked up today at 62.10.
Now I'm Suncore's good too, but when I looked at the nitty gritty, Danny knows me. When I focus on something, Danny, how methodical and detail oriented do I get?
Autism
Like,
times 1,000.
yeah. Uh, of the three, Suncore's the weaker play. Now, macro scale, all three are great. I'm bullish on all three. Suncor, I'm less bullish. Does that make sense? Like
Yeah, that
in
makes
a
sense.
macro,
Yeah,
yeah,
yeah.
yeah. And there's several reasons for that. But like Suncor, they also have good dividends. They also have good, they're good. They've sort of learned how the markets can be real fickle, and they seem to be tired of that.
Yep.
So when they do get investors on board, they seem to treat their shareholders really well
Yeah.
because they don't want to lose them. And I kind of like that, to be honest. Like
That's
there's
rare.
a
That's rare.
yeah, yeah. So they're also like that. However, when you actually just look at the overall business structure and what specific geography they own and what specific infrastructure they own, they're not as strong as the other two.
That's fair.
Even though there's a little less debt. So
Yeah,
just take that for what it is. Yeah, take
technically
that for what it is.
speaking, again, why did I buy at the prices I bought? Well, because I did some analysis on this myself, and I just said that things are at strong support levels. Again, where I bought coincides with the Fibonacci level, which is always good. Um, and I got in at 62.10, roughly around where it's at now at 62.38. We do have what might be a double top here, which could be a bearish sign because we were unable to break new highs. But again, just kind of like the others, they're roughly tracking each other, which is good. So again, the only worry here is that this support level caves, and we might be looking at 57.86. That's a risk. So just watch that little vacuum zone, as we call it. It's basically the space here where there's no levels. But again, we do have some very strong support here. Green triangle on the KRI, that's always good. And targets being 74.52 and 83.34. I made sure that I stocked up on all three of these things today because
Yeah.
this is not something I'm just going to ape into with like a whole bunch of money. I'm going to buy a little bit here, a little bit there. I'm going to follow it as it
Yeah.
goes up, buying on dips. So this is kind of like my first entry into this position because again, we're talking about long term and like, I mean, where do you think this is going to be in 4 months, right? Based on what we said, I think that 72,
Yep.
74, 52, that's the first target is a perfectly reasonable target given, the influx of demand that we could easily see.
Yeah. Yeah. And the also let's think about this overall, Danny. Uh, Once say there, okay, oil bids higher, everybody bids for this oil in particular, and say Trump just walks away from the Hormuz situation.
Hmm.
Okay. Well, the US is going to be out of business there indefinitely. Okay.
Hmm.
Which we'll get into because we got to talk about ConocoPhillips, Exxon,
Yep, yep, yep.
and Chevron. But what I'm saying is once the US refiners start to bid for that oil and those flows get going, right? Then there's actually less and less pressure for us and less investment really for us to do anything in Hormuz in the first place
Yeah, I
because
mean,
our
there's less
refiners
desire. It's like we
already
got this.
exactly they'll already have that flow going, and once that flow is established and everything's just bobbing and weaving, then it'll I mean honestly I think it would be smarter if it just stayed like that. Why?
Correct, because we
Because
have everything over here on our side of the planet anyway, and we
Alberta,
have a strategic partner who should be more of our partner, but is not for all sorts of retarded reasons.
right.
That's right to our north.
And not just that, Danny, but let's think about this. Which area, what region of the globe do you think is more geopolitically stable? East Asia, the Middle East, or Alberta?
Jesus, let me let me count the reasons. um,
Exactly. So I would much rather work with Alberta than I would, with all the, trust me, I've had plenty of Middle East stuff my entire life. I
Yeah,
mean,
nobody knows more than you, but also from
uh,
my perspective, just focusing on the economics and the socioeconomics and the geopolitics, just from an economic and academic standpoint, it just doesn't make sense to be in that overt of a hostile area where we could be right here with our neighbors and build better relationships with them. So with that, we
right.
could discuss a little bit about Exxon. As I'm very on the record about this, it's one of my all-time favorite stocks. This is just not going anywhere. I mean, anytime you have a company with like a literal private army. Like its own military, it's probably a good idea to go with them, right? So this would be the 800-pound gorilla in the oil space. Chevron's up there too, but we'll talk about Exxon first. I am on record about the fact that I bought this at like $26 during the height of COVID, when it was sky is falling, everything's going to hell, and of course, because we're all locked down, they got hit with a double whammy that there's no demand, right? So not only did we have stocks just selling off like hotcakes, but we also had them being hit particularly bad. And again, I got in at like $26. So I've had this for a long time. And again, am a huge fan of this. I'll let you speak on your position on it in just a second, but that's just fundamentally. Technically, it still looks good. The only worry here is that we may have kind of an extended head and shoulders pattern. If I could just draw this out real quick for those of you who know what that is, it can be a bearish sign, but the thing people don't understand about the head and shoulders is what completes the head and shoulders. It's not the it's not this second shoulder here, which doesn't want to render. Yeah, there we go. It's not this second shoulder here. It's the momentum that we see right here, right? So if we have a head and shoulders pattern, basically what this is saying is we wanted to make new highs. Here, we were unable to, which tends to be a bearish sign because it's like, why? Okay, if you were unable to make new highs, there must be a reason. And again, it's typically a bearish sign. It makes this, as you see here, I have a bunch of technicals drawn already. 147, 146 thereabouts seems to be that make or break, what we call the shoulder line, right? So again, if we pivot here, it is off to the races. I think that we will. Don't forget that they had a lot of infrastructure loss due to the whole, Iran thing, right? So if we can get, as you mentioned, we can get some of that federal funds to, really bolster this company up. We could be off to the races here pretty soon. I already have some targets drawn out. We're looking at like 182, 192, and from current levels at 146, I think that that's a very, very enticing target. Granted, that's of course assuming that we could retrace all this here, but the targets that aren't listed here as Fibonacci levels again, 182 and 192. I see no reason why that can't be accomplished with the right amount of federal spending and infrastructure and so forth. So why don't you tell us your position on Exxon, why you like this one?
I Right now I don't.
Okay.
Here's why. This is going to go one of two ways. Okay. This is going to just continue to, uh, you know, sort of, you know, peace, war, hedging high, Axios article after Axios article to jawbone the price of
Sure,
oil
sure, yeah.
down,
Yeah,
right?
you're
It's
talking
it,
heads.
it's yeah, yeah, that's just gonna happen, and that's probably and it's a lot of this pricing. What I'm seeing here is I think I'm seeing. I don't know how the timing works out, but if you would line them up with the dates of the tweets, I would bet it's due to the jawboning. That's
Sure.
probably what you're seeing there.
Yeah.
Now, here's the problem, though, Danny. Exxon still has a lot of infrastructure that hasn't been blowed up yet in that region. Qatar and the UAE specifically. Okay. We haven't heard about this really, but the Iran has walloped the UAE big time.
Yep.
Now, how much of that is Exxon infrastructure? I have no idea.
And that's why I
However,
wanted to make that clear that I think that this inability to make new highs and this kind of like, feeling out the territory here, I think it might be due to that.
I would tell you how I would play it. I like Exxon, but the way I see it presently is I would be out of Exxon at the moment because this can go down a path or a bad path really, really fast. In that, say Iran just gets fed up with Trump administration or Israel decides to, attack Karg Island, or Trump has a really bad day or whatever, and decides to just order attack Tehran,
Mhm.
right? What Iran is going to do, okay, is they've already said what they're going to do. They're just going to obliterate all of the U.S. infrastructure in the region.
And that is a
That
risk.
includes, and that
Yeah.
includes
That
Exxon
that that
Mobil.
that is a big risk. So again, if you're buying here at 146, which personally I think is a good price, there is just the risk factor of exactly what Zach said. If that comes to fruition, you do have some targets here that you could put limit orders. Say if that does happen, because I don't foresee this, retracing this whole this whole you know uh, channel here.
Gain, yeah, right.
Yeah, the whole rally, I should say. But I could see it, testing maybe 129 in the event of, a
Ah,
catastrophic infrastructure loss. So I would be looking at these as targets to get in. Again, I personally feel, just talking about me, that 146 is a good price, but what you say has definite merit. And if you're risk averse or you don't have a lot to invest, I would put a limit order here at 139, 129, just wait.
so I have that's what I did is
Yep.
I figured with a move like that you're talking about a 15% correction from current prices. So I put in a limit order for 130.
Yep. Yeah,
That's what
that's
I did.
perfectly
Yeah.
reasonable. Moving on to Chevron, I think what we're going to see here is more or less that these guys are highly correlated. This is the other. I would venture to say that they're the 600-pound gorilla, but they are still a big gorilla nonetheless. And what we see here is something rather similar. just doesn't seem as drastic. It does seem like we don't have necessarily a head and shoulders here. We have more of a sideways corrective pattern. I think though the same risk here with getting in at Chevron at a much higher price, by the way, 180 is the same risk that we have with Exxon. And don't forget that these two will be closely correlated because they're very tightly coupled within the sector. So if
Right.
you
They have a lot of infrastructure in Qatar.
oh,
And I'm talking,
Qatar
dude,
specifically.
I'd fly into Qatar, dude, like it was really cool. Like, I mean, I kind of didn't like it, but like it was interesting in that like you have a desert and then there's just like this mechanical industrial city, and it's like, what is that? It's like, oh, that's Chevron. Like,
Wow. Yeah.
like,
I
like,
have
like
seen.
just all natural gas
Yeah.
infrastructure, and
Yeah.
it's
It
like a whole
looks.
city.
Yeah,
It's
it's
insane.
almost beautiful in a sense. You know, just these gigantic structures that are there's a span as far as the eye can see. It's really amazing. So yeah, again, I would be looking at 180. I think is again for the same reason I said with Exxon. That's a decent price to get in. But if you're looking to be more risk averse, you don't have as much, but you still want to get in on this. Again, it does pay a dividend. 172 to 162 are what I would be eyeing now.
So
Moving
I should change mine from 160 to one. I'm sorry. What was the last one you said? At
So I
one.
said 172 and 162. These are really strong Fibonacci levels. If we do see catastrophic infrastructure loss, I can see us getting down to 162. I can't see us retracing back to where we were at the beginning of the year. I just can't see that.
I
But I
have it
can't.
down to 160, but I
I
may change my limit order to 162.
Yeah,
But
because
yeah, I have it
this one
160.
is not as if we had a stock that was incredibly volatile, you might get it on a wick. You know what I mean? Just the volatility. This one's not like that. So I would change it to 162, even 163. Sometimes you put it off a little bit just in case you missed the wick. But I mean, we're splitting hairs here. We just want you to get in
Right.
on the trade, right?
Right.
And I'm just not convinced it will go to 160 even.
Right. I can explain that difference in volatility, by the way. If
Go for
memory
it.
serves me correctly, Chevron largely owns assets in Qatar, while Exxon also has stuff in Qatar, but has a lot of assets in the UAE. And as I said before, Iran has really pounded the UAE
Yeah.
big time, right? Because they're the ones that have been the most bellicose towards Iran during this entire situation. So what you're seeing there with it being less volatile is probably because their assets have, come under less damage. So
Yeah, I'm trying to find the dividend is not shabby at 3.78. Like if you're knocking on 5%, 5% is what I call anyway a dividend king. 3.78 is not shabby. I think Exxon, if I recall correctly, is only like 2 something. Let's fact check that real quick. Where is it? 2.75. Yeah. So good time to move on to ConocoPhillips.
mm-hmm.
Same type of pattern here, same type of structure. Where's my fib retracements? Okay, here we are. Oops. Trusty fib retracements here. Um, Lining up little bit more messily. Oh, actually, move out a little bit. That's because I didn't anchor it properly on the bottom. Where are we? So while I'm figuring this out, why don't you talk a little bit about what's significant about ConocoPhillips with respect to the other ones?
ConocoPhillips has, if I remember correctly, they have some assets in the Middle East, but less, right?
Hmm.
Uh, However, you run the same risk. So I put in for ConocoPhillips, I put a 10% correction from here, and I put in a limit order.
Okay.
So yeah, that's
Yeah.
what I did.
So if you want, what are you doing? Why are you not cooperating?
I'm sorry.
Uh, okay. Yeah. It's just being finicky about this one stock. I don't know. So roughly at strong support here. Lots of green
Yeah, that's a lot
triangles.
of buy pressure right there,
Buying
right there,
pressure.
man.
We still. up and to the right, really good sign here. If you are risk averse, looking to get in at a good price, because again, all of these are, not exactly penny stocks by any shake of the stick. So we have 110 and 104. Those would be good places to get in the event of a retracement. Upside here is pretty good. Any of these levels in the 120s would be good for profit targets if you want to get in and out. Long term, we're looking at 148 and 166. And again, I stress at one over 3% dividend. This is one you want to hold on to, in my opinion. Oh wait, was that is that fact check myself? I know that was Chevron was 3 point something. Let's check ConocoPhillips 2.82. Okay, still not shabby.
All right. And EPD, I think EPD had like a
So
7%
it
dividend
it
yield or
was
something, didn't it?
that was I wanted to share these two, so I'll go ahead and take a little bit of time to revisit these. If you remember, we talked about this in our last podcast. One of the reasons I selected this is 5.84 percent dividend king, right? And
Mhm.
it has the kind of qualifications that we're looking for given this particular geopolitical turmoil. Great support here. I bought this today,
Yep.
36.77. Again, really not
Hmm.
bad considering the dividend that it pays and the upside that it has. The next one we'll revisit is MO.
Well, hold
Um,
on one
yep,
second. I wanna say one thing
sure.
about EPD when I was looking into it. Um, I may try to get more that dividend. I really do like not just that, but when I looked at their business structure and I looked at like the pipeline pathways that they own and their business model and everything. Look, it's very possible that we're going to see pipelines. I would say from Canada to California or from Texas to California sometime during this period, or
Mhm.
sort of those construction projects starting, like during this whole oil situation with Hormuz. The
Uh,
reason why I say that is gas is incredibly expensive in California, but their energy demand is still incredibly high,
uh,
and they tax it and all that other stuff. And they essentially they need oil. They need like a pipeline going to the state, like
yep,
bad,
yep.
right? Not just that, but you're talking about AI build outs, so on and so forth, and
Mhm.
sort of like a reshoring of not just natural gas projects, but oil projects in the Permian and so forth. So them, owning all the pipeline infrastructure that they do, that could be another big bearish, or I'm sorry, a big bullish
Yep.
thing
Yeah, I just
for
don't
EPD moving
I
forward.
don't
Yeah.
see it having the risks that these big boys downstairs do, right?
No. No.
So
Mm-mm.
that's one of the reasons why I felt very confident to buy today. Where I would be less confident, in full honesty, because I already have Exxon, so the situation is different. I would be less confident investing in CVX or COP right now, based on the reasons we said before. The next one we'll talk about is Altria Group. If you remember, that was like tobacco and those little
Mm-hmm.
little patches people use. I got in here at 69.59, I guess. And this is another dividend king. And remember, this is kind of like a second order, 5.84% dividend. So again, nothing to shake a stick. This is a very uh, strong dividend king. And again, the reason why this is like a second order effect kind of thing. Not only do I like this stock anyway, but it shows strong signs of growth, because what happens when people are put in a bad situation? They're already in a bad situation with more than half of the populace not having $500 should a medical emergency arrive. They got to charge everything. DoorDash even has like buy now pay later options like DoorDash. Like you don't even have $10 for a burrito. Like we're at that level. Okay. Now imagine
Mm-hmm.
how bad things are going to get. That's a true story, by the way. Now, um, imagine how bad things are going to get when oil could spike to easily $150 per gallon, right? And you think gas prices are now. I see people are putting the little. Remember back in the day, they had that little sticker with Biden. I did this at the gas pumps. Now I'm seeing
Mm-hmm.
them with Trump with the exact same
Yep.
thing, and rightly so.
Yep.
None of
Hey.
this would be the way it
Yep.
is without that. But imagine what would happen if that was doubled. Okay,
Right.
I just walked by the marathon where I live. Gas was at like 4.35. Um,
Yeet. Yeah.
right? So like double that and you're pushing on $10 a gallon. We've never seen that. We just don't
Yep.
even know what that's like. That's like another universe to us. So I think that not only are we going to see some action in our energy picks, but we're going to see a lot of secondary, effects of that, which include this. So,
Right. Now,
any thoughts?
yeah, yeah. This one, uh, I was gonna, I had an idea, then you went, I didn't want to interrupt, but, this one, what you're like, it's definitely going to do very well. However, I think because again, it's a second order effect. It's going to take some time. You know
And
what I
there's
mean?
risk for
It's
sure. There's risk
well,
because if the markets get clobbered, there is a risk that we just get clobbered with them. And, I may
yeah,
have to
right,
hold this underwater 66, 64. But I'm going to be a buyer there. So I'm
right,
okay
right.
with they call that averaging down, which is good and bad, right? Because a lot of times what hedge funds will do is hide losses in averaging down. But if the thing just keeps going like this, you're really
Hmm.
compounding losses,
Right,
right? So you
exactly,
have to be
right,
extremely confident in your selection to do that. And again, we're looking at long term. This isn't something I'm doing with futures or whatever. People try to do that with futures and get clobbered because, we have margins and
right.
stuff like that.
Now,
Um,
but yeah, this one, I agree with you on this one. Uh, I don't know. Maybe it's just me. I would be more comfortable a bit lower than where it is right now. It's at a pretty good spot, but you know, I'm trying to look at the
so
price
so we got
action.
so we got 66.75 and 64.46 that I
66.75. Yeah, my limit
yeah.
order is at 66
Yeah,
80 or
yeah.
something like that. That's where I have mine placed.
Yep.
That's just me. But this is the reason why I felt comfortable putting that limit order in was because again, this is more a long term. If I get it like a month from now or 2 months from now, I'm cool with that.
Yeah,
Like
no,
I
no,
don't need to get
100%,
yeah,
100%. You're
yeah,
patient on it. That's fine.
yeah.
So one thing I wanted to stress before we closed, like, and it's not without mention that you might not have very much money to invest in all the stuff that we're talking about. However, I want to make a point clear is that for just $300, and I know 300 might be aggressive for some people listening, but $300, it's not like 30 million. You know what I mean? $300. That's like, if you set that aside, what I got today was at least one share of CVE, CNQ, SU, MO, and EPD. That's this guy, and these. Oh, and EPD. I got all of that. At least one share for about $300, right? So even if you could scrape together $20, guess what? We still have stock picks in there that are in that price range. And don't think that that's trivial because when I was during COVID, like 20, you remember how broke I was then. I could barely pay my bills. But every once in
Hmm.
a while, I would set aside $100. Guess what that $100 purchase was? Exxon, right? At $26. So being broke,
Hmm.
I contend, can actually work to your benefit. It doesn't make sense, does it? Actually, it does because it forces you to be that much more parsimonious with your orders, right? So
Right.
everything I have, and I'll share the percentages. I have some that have risen 400%, 700%, like just ridiculous amounts because I only had that much. Now, granted, it's not as much. I haven't been able to see, too much out of that. I basically took a small portfolio from to $5,000 over the course of a couple years. Still nothing to shake a stick at, but obviously I would want those numbers to be bigger. But if I had the capital to make those numbers bigger, I probably wouldn't have got the price that I did. Right. So, it's a trade-off. So just
Right,
wanted
right,
to
right.
just wanted to close
But no,
on
you're
that
right.
note.
You're right. Like when I was looking at these stocks at the current valuations, but I see all of this structural upside. And
Sure.
me, like as a macro guy, like I am very good at seeing the large drivers. You know what I mean? The
Yeah.
large pressures that
A hundred
converge.
percent. And to that
Yeah.
point, we still have time because we've been on top of this and starting to accumulate early. Again, if you're living paycheck to paycheck, but you could find a way to set aside like $10 or something like that, you still got a good, month and a half before these are going to start to take off. And
Right. Yeah.
even then, if you finally even if you've missed the boat, still just go into buy on dip mode because we have I mean, this is like a structural shift. So,
Right. It
yep,
is. And I did want to one more thing. Sorry for
yep.
the. I've been thinking about BNO. What are your thoughts on BNO? That's just a Brent crude.
BNO.
Yeah, that's Brent crude ETF.
So I would have to look into the specifics of that, and like I'm not seeing it come up. I don't know off the top of my head, but
Okay.
and anything crude related, especially Brent for the reasons we just discussed, is going to be a good idea. And I think especially if they pay dividends, I'll have to check if they do. But this could be a good kind of hedge because again, the reason why people have ETFs is it allows you to expose yourself to a sector and with minimal risk, right? Because you have a
Mhm.
basket of things. So I'll look into it more carefully, but especially if it pays a dividend, yeah, anything in that sector is a good choice.
Okay, one thing, since you gave your broke story, I'll give you mine. Uh, Danny knows me for the longest time now. I've just, whenever I've had any sort of disposable income, I've just accumulated gold and silver in case like the whole world ends. So it's like, back in the day, it'd be like, ah man, like just when I found out about COVID, first thing I did was I got silver. I got $250 worth of silver at $14 an ounce.
That's incredible.
And yeah, what's
Considering
silver
what it's
at
at
right
now.
now? Right.
Silver, I mean, it's not at 100 anymore, but I want to say it's like 80 something. It's still up
It's
there.
above 70. It's above $70 an ounce, right? So, I mean, what is
75.7587. I just fact checked myself. Yeah, it's close enough.
so $14? That appreciation is pretty damn good, right?
Yeah,
And
yeah,
that's being broken on disability.
yeah.
So,
So I mean, like if us retards can do it, you can do it too. So,
yeah.
all right,
Great. All right, Danny. Sounds
sounds
good.
good. Yep. Take care.
All right. Bye.